Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And if you're looking for some undervalued investment opportunities, click subscribe. Even if you're looking for financial education or have some questions that want to be answered, click subscribe, put them in the comments section. I'm more than willing to answer most of your guys' questions if I see them in the comment section. And that's exactly what I'm doing here. I'm going to answer a question. The question is, for your charts that use price data back to the 60s and even beyond, why do you use nominal prices and not real adjusted for inflation? Your charts show an increase in price, but do they really show an increase in value? Or are they just tagging along with inflation, attempting to think on a longer term than a shorter one? Thanks. So your answer is I never use the inflation adjusted price. And I don't even know what they would use for an inflation adjusted price because we actually don't know what the real rate of inflation. They've changed the rate of inflation in 1980, 1990. They changed it again in 1996. They messed with it. They even messed with it here recently. Then they went to CPI. Then they went to adjusted living something. The whole inflation thing's a mess. So you never want to use inflation ever on anything. Ratios is what tells you relative value against asset versus asset. That's like the basic first step of evaluating an asset is you're going to have to price it against something else. It's all just relative. And hence, that's why everything we use in terms of valuations is basically a ratio in life. Everything. And you're going to say, if I bring a box of macaroni, and I say, is this expensive? You're going to say, let me go look at the other macaronis. So now you're doing a ratio. You're saying this macaroni versus this macaroni, or you do it on a dollar per ounce basis. That's a ratio, a dollar per ounce. Everything we do, everything, it's all ratios. So what I do is I go asset versus asset compared to history and then do that ratio. And whenever it's cheap, that's when you invest in that asset. It is that simple. That's the only way you can make money. You can't make money any other way, knowingly make money. Because if you're making money, it's just by happenstance. You just got lucky. If you made purchasing power gains is what I'm talking about. Not just money to make money because you don't know what it's adjusted to. If you lost value you can make money and lose value against other assets. You lost purchasing power. If you lose purchasing power, then you lost the entire reason why you invested the money in the first place, right? So I never use inflation adjusted things. We don't know what inflation really is. They manipulate all the inflation numbers of CPI and all that. It's all garbage. And what I would want you to do is start pricing assets versus assets. Then it takes everything out of the mix. And then you just have a ratio, like a price to book ratio, price to earnings ratio. We evaluate all those things to get a quick valuation. You have to be an excellent person at what's the platinum to gold ratio? What's the oil to gold ratio? I'm using gold as basically my anchor for valuations. If someone says that is the wrong way to do it, they probably, in my opinion, haven't studied history. They don't know logic. Basically, they're a lost soul trying to figure out how to make money. That's kind of my approach because when you look at these things, you don't even have to be in finance. You just have to have somewhat of a thinking brain to say, okay, how do you value something? It's going to be like this versus that. You can't value it any other way. And if you have a dollar, it's garbage. You don't know what the inflation rate is. And you wouldn't want to use it anyway, because then you have to adjust everything. And that's the way that I view it. I like doing ratios, and that's the only way to identify what is undervalued in relationship to history. So there's that. Now, can you do a full video on long-term history and future of platinum and palladium? I've done a lot of videos on platinum and palladium. Probably they're in market updates. They're all over the place. I would search my playlists and see if you can find something on either one of those. I've done long-term charting. I've done all sorts of stuff with gold, silver, platinum, palladium, everything. Platinum is the best value metal in terms of ratios. I think it has a very good future in front of it in terms of demand, supply. I think platinum's a good one, and I own quite a bit in it. How would I play platinum? I know there's a couple of people that ask questions, regarding platinum. do you feel PLG is a good way to play your expected rise in platinum's price? I think the easiest way to play platinum is to buy physical platinum. I've said this a lot. PLG is more, as we go and get more inflation, and as these things go up in price, you're going to see more nationalization. You're going to see more countries less willing to do, you're going to see more taxes. They're going to be less, I think, willing to just let their natural resources out of their country. They're going to tax it. They're going to nationalize things. They're going to do all sorts of stupid stuff as these prices go far higher. So I like the physical metal. It protects you against a whole bunch of risk in terms of nationalization, in terms of taxes of your own investments from your home country. I mean, you could get hit three ways on some of these things, and the lowest risk way to play it is physical metals. I think that's a very low risk, high reward bet to make, is the physical precious metals. Physical being like you own the physical metal somewhere. I know I've got people asking, would you do physical versus an ETF? I wouldn't do the ETF ever. I would always buy physical metals. The ETF, I mean, what are you going to do if the physical runs short and the ETF isn't backed by it and they do an audit? You just lost a whole bunch of money then, if they don't really physically have it. And if you can never redeem it, well, what's the point? I don't understand the point of it then. But that's my take. That's just how I view things. I know people, they want everything to be stored somewhere else. They want it to be as easy as possible, but you know what? Sometimes I guess I don't want it to be easy. I want it to be safe. I want it to be secure. I want it to be in my hands where it can't be leveraged out or loaned out or leased out or anything. It's all just something that I've got. Here's one. He's talking about, I looked up a few in terms of oil rigs and whatnot. He wants, one thing I've never had explained to me, but I know are a play with the most leverage, is oil rigs. How do you know when oil rigs will go into production? Is it price, demand, or something else? Well, what's important is what the chart says. And the chart is telling us if it's going to take off now or later. It's not necessarily the exact timing of when oil rigs go into production, because that'll probably be too late. Some of them are already in production. It's just, there's multiple things that make oil rigs go up. They have lease rates per day. Those lease rates go up based off of the supply and demand of rigs. And usually in a high oil environment, the demand for rigs go way up because they want to drill a lot more. That's the service they provide. So their lease rates go way up when oil prices go way up, because the demand for oil goes up, which means the demand for their services go up. I would buy these companies based off of the chart patterns themselves, because they're breaking out of monster patterns from very low depressed prices, which means that one, they're at good value, two, they're just breaking out, and three, they probably have a lot of room to run. So it's a low risk entry point based off of value, based off the services they provide, on oil price, all those things. It's of good value in my opinion. And you could probably throw darts at any one of those that you're naming in terms of the oil service sector. Noble is good, and so is VAL. I'm trying to can't remember the name of that company, but that one's good too. They're all pretty good. And I bet you the one with the largest chart pattern is probably going to be the one that returns the most. The one that has the largest beginning portion coming into a point. And I think that was HLX Helix was one. There's another one too. I think OIS looked pretty good. And there was one more that I can't think of. That they all looked really good. So go back and look at my technical analysis on the energy service companies, and you can see which ones I think are pretty good. Someone set up here, I'm not sure, you have a few months of uranium going down, maybe one. I think with Sprott coming into the space in September or so, you'll see heavy buying in August or earlier. I'll continue to read the charts. That's what will show us when that turning point is. The reason I say it may take some time is because we broke out of patterns to the downside, and very rarely are they just going to turn and come back up. They could, but usually you have a little bit of a basing pattern before it turns and comes up. So my guess, I'm just guessing, is going to take some weeks or months to do that. Just like Bitcoin's fallen from a huge momentum drop. And I don't think that's going to turn around anytime soon. I think it's going to be down for 6 months to 2 or 3 years. I don't think it's just going to turn around and go back up. That's my opinion, and what I've seen in markets is you have these basing periods or consolidation periods, and they're usually pretty long when you're coming down with that much momentum. Very rarely, I don't think I've ever seen anything turn and go right back up with a move as large as it has going down. So looking here, and remember, value is all relative. I don't use price as value. Someone in here says, I'm interested in buying companies that buy physical uranium, i.e. Yellowcake. Can you do a chart of one of those companies that buy the actual metal? Yeah, I can, but that's just pricing uranium. And I chart the uranium price usually in the beginning. And if they buy the physical uranium, it should be just tracking the physical price. So it should be down quite a bit. If that's, because I usually put in the price of uranium in the beginning. If you see that, then you know what the price of Yellowcake is doing, usually. Can you do a full video long-term hit? Okay, I already read that one. Moving on down. Where do you go for these amazing commodity charts? I go to Trading Economics. Trading Economics is the one that I use to look at all the charts for everything. Let me see here. Yes, central bank magic tricks will never stop. Manipulation, central control. My guess is rates are kept low in the treasury market. Dollar weakens as price inflation rages. Private money will drift to real estate, stocks, tangible assets. Central bank buys their treasuries. USD will weaken before the endgame. Endgame may see the dollar strengthen, perversely so. Some say the endgame will not arrive until the 2030s, so use this decade most wisely to prepare. I don't know about the endgame, but I don't think they can keep interest rates low forever. They're going to have to buy everything. I mean, it's going to be a massive devaluation of the dollar. I've read a whole... Okay, so I go on YouTube. I watch some clips. Usually I don't watch them. I just read the titles just to see what people think. And I'm seeing this, and I've heard this from Lynette Zhang. I heard it. The one guy I don't watch that much. I don't really like his videos. Neil McCoy or something McCoy. Yeah, these guys are saying that how real estate's going to go down, and then in another clip they'll say that we're going to have massive inflation. I don't think I've ever seen a time where we've had inflation and house prices have gone down in history. So maybe I just missed it. Maybe, but I don't know where these guys are. If that is the case, if we've never had a time in history where home prices went down and we had a massive inflationary environment, then I probably wouldn't listen to anything these people say. I mean, that's like a total disregard for history. I have no idea how you can have this massive hyperinflation and not have home prices go through the roof. That dumbfounds me. Because, I mean, if I had a bunch of money, why wouldn't I go buy some real estate? If I had millions and millions of dollars and real estate was going down, like they were just pumping money, and I got millions of dollars for nothing, I would go buy a house, and then the house prices would go up. I don't know where these guys are getting this information. Like, I feel almost like I'm in this island, and I'm all alone, and I'm watching all these people around me, and I don't know what data they're looking at, but I just think they're crazy. Like, they don't make any sense. Maybe that's just me. I'm looking at it like they're calling for massive inflation and then a decline in real estate. Cocaine's a hell of a drug. That's all I'm going to say. Cocaine is a hell of a drug. I don't know how much they're taking. I don't know if we need to admit them into a psych ward. Doesn't make sense. And I've read other things too, like real estate and demographics and all this other stuff. I'm like, well, for the fact that real estate has already taken off, the demographics do support it based off of the evidence that we have today. So it has to. That's why the prices went up. It's like the proof is what you see. And when you trade things, when you look at charts and when you look at things, it is that simple. Like, you trade what is in front of you if you're trading. If you're investing, you just do it on a longer term scale. You look at the big picture charts. That's where you get your data. I don't know if someone had to ask me the question, what is more important, fundamental analysis or technical analysis? I would say technical analysis is more important because you can have good fundamentals and your timing could be just absolutely horrible. And most of the time it is. At market tops of commodities, the fundamentals look the best. Market bottoms, they look the worst. So what time do you invest in it? You'd have to go exactly 180 of what the fundamentals say when you invest in commodity companies and all these other companies. You want to invest in companies when their fundamentals look horrible because nobody wants to invest in them. Invest in them yet. Because their commodity price moves all over the place. So their fundamentals moves all over the place with the price of the commodity. So you can't use necessarily fundamental analysis and look at discounted cash flows to get a net present value. You're going to look at it and say, this is the worst company. No one should ever invest in it. But then it goes up 100 times your money. It's like, you have to look at the charts, and the charts is basically the collection of everyone in the market interacting with each other and giving you an opinion. It's like knowing if you're winning or losing the game by looking at the chart. And everyone else, you can look at all the fundamentals in the world, but it's not going to tell you when it's going to turn. It's not going to tell you anything. You would have been investing in uranium for the past 5 or 6 years. You would have been sitting there waiting, going down and down and down and down. Now, if you know how to read charts, you'd say, okay, we've bottomed. It's starting to come up. We break the big pattern, the big downtrend. It's game on. New trend. We have a new uptrend in place. That's how I view things in this world. And the charts are going to tell you all that. And that's why I go over so much technical charting. And a lot of this stuff, I mean, on the short term stuff's all just noise. And I know a lot of people, they're putting in a lot of news. News is just short-term noise, everyone. It's just short-term noise. You don't need to get all bent out of shape on it. I know a lot of people are asking about Basel III. I don't know that much about Basel III. I'm not an expert on it, but I don't think it's going to do anything. It should already all be priced in. That's my guess. And I don't know why everybody thinks it's going to be a huge game changer, and maybe it will, but we are already positioned in the long game here. We're already long all this stuff. It's not going to I'm not going to do any other changes to my portfolio based off of Basel III or any of these other news. I'm already long a lot of silver and platinum. I have my gold mining companies. I have all that stuff. So it's not going to me, I'm not going to do anything different. So I don't know why I would really even research it very much. I only research things that I think could be an impact to the structural market underlying conditions. If it doesn't change the structural conditions, I'm like, don't waste your time on it. So a lot of these, if you're looking and you're putting in stuff here and you're trying to even make sense of things. So for instance, this person writes, so people are selling PMs because they think a rate hike might happen. Inflation's 5%, no way Fed would raise rates to anywhere close to that if they'll raise rates. So the way that things move is it's based off of perception, but we are positioning, or I am positioning at least, in silver and platinum, and I'm not worrying about anything else. It's cheap in relationship to history. It's cheap against all the other assets. We know the demand's out there in the future. And whatever happens in the short term, I'm going to be riding through it. But 5 or 10 years from now, I don't think these are going to be at the same price. Relative value in relationship to everything else, I think they're going to gain relative value against other assets. They could sit there and the stock market go down 100%, way down, like 90%. I was going to say 100, but goes way down. If it just sat there, you make money because you can buy more of that asset. Now, here's another thing to think about. I know a lot of people think about inflation, deflation. The best scenario that you can make money under would be, let's say you piled your money into gold. Gold goes down 10%, but everything around it falls 50%. You don't have to pay any taxes. You didn't make any, quote, real gains, but everything else you can buy more of. That's the ideal world. And that world won't exist because they're not going to let that happen. So all these deflation people, I don't know how they can have deflation. That will crash the entire system. They don't know how to tax deflation. If they need to generate more tax, what do? You inflate like heck. You inflate. The states need more tax. The Federal Reserve or the federal government needs more tax. Everyone needs more taxes, it seems like. So they're going to inflate everything. It's not like, oh, we're just going to let it all deflate and crash and ruin our currency, where that's where we derive 100% of our power. They're going to keep that in check and have that dollar be in power, because that's what makes them powerful. They can control it. They can do whatever they want with it. They got an army or a military to back it. Of course, they're going to inflate. That's my opinion. They're going to continue to inflate. I'll stop there. I'll do another clip on something else that I've been kind of brewing on. Thanks for leaving comments, everyone. I really appreciate it. If you've donated to the channel, thank you for donating to the channel. I really am thankful for all you guys who are doing that. Thank you. If you guys like this content, please give me a thumbs up. And thank you for listening. This is Finding Value.